savings was really solid, 8.3%. On the household spending side, up 0.2. Not bad, but much softer. Claims 218,000. Yesterday, 1.9% GDP third quarter. And then the Fies de Resistance, if you're a bear in the stock market, another weak read in Chicago PMI in front of the nationwide number. What do you think of all these data points, Professor?
Well, I don't think there's any question the economy is softening. I mean, look, 1.92% growth is probably still above the Fed's estimate of trend. That said, I think the trade war is taking its toll. The IMF estimates that global growth, is down almost 1% because of the trade war. The Fed economists get similar estimates for the United States. So I think that's the main thing in town. Business investment's been weak. Until that stabilizes, I think we'd be lucky to sort of stay on this, moderate growth path.
Now, yesterday, the Fed, of course, raised for the third time. Our very own Steve Leisman, I thought, really nailed it several times yesterday. It's now a one-way bet. We had 3 cuts and a pause. Now there's really no talk of any type of upside in rates. First, do you believe that? And second, it is historically not very feasible that you see a pause and a pivot in the same meeting. What are your thoughts?
Yeah, I completely agree with that. It's hard to see how the data could be so terrific that they're starting to hike rates in December. They emphasize that it would take much worse data to get them to cut again. But I think it's not symmetric. It's sort of still one way. If you go over 6 months or a year, I mean, that's a completely different story. But near term, yeah, it may take more, but there's no question it's still tilted down on rates.
Now, my favorite topic, and this goes against many of the issues we just discussed with our Fed, but Sweden's Riksbank said by the end of the year they'd like to get rid of negative rates. As Christine Lagarde comes in, many finance ministers in Europe are very vocal anti-Draghi's strategy with regard to moving forward. How do you fit all that in a slowing economy? How's Christine Lagarde going to avoid negative rates when the economy, as the IMF has pointed out globally, is slowing?
The short answer is she's not. And I think the ECB has been studying negative rates more, and they're finding they've been working better than they thought. We're even seeing pass-through to deposits, the people with 100,000 euro or more, which is something they thought wasn't happening. They thought was hurting banking profits. So now, no, I suspect we'll see more in the way of negative rates. The big debate in Europe is actually about the quantitative easing, which is very different than the United States. It's a transfer from the rich countries to the South. There's a lot of pushback. There's some very prominent former ECB bankers protesting that this is going on. We've never seen that. So Draghi's leaving under a lot of controversy about the quantitative easing in Europe.